Hi, good morning, everyone. Welcome. We will begin shortly. Let's just allow a little bit of time for everyone to settle down. Welcome, Amirul. Okay, so I guess we have most people in now. Once again, a very good morning to all of you. I am Audrey, the Associate Director with Global Migration Solutions. Welcome to our very first webinar for the new financial year 2021-2022. As you know, the Australian financial year begins on 1st July, and all the new immigration policies also takes effect then. Our Australian migration webinars have always been popular, and this speaks volumes in relation to the fact of why Australia is being the world's #1 migration destination, especially for the affluent. The webinar today has been designed in the best way possible to provide the most comprehensive information to you. We will be covering 3 key topics today. The first session will cover the latest immigration updates for the Australian business and investment visa. The criteria has been raised now. However, most interestingly, do look forward to learn about the new investment visa stream that just kicked in, which may favor many investors. I'm referring to the ever popular Visa 188B, which used to be done through a government bond investment. This requirement has now changed, with the funds being invested into a couple of complying investments instead, which, if done the right way with expert advice, will yield you an attractive return of investment on top of you getting a visa in Australia as well. So this actually brings us to the second topic for today, which will cover what are the qualifying investment frameworks for 188B and 188C that would meet the immigration requirements to ensure your investments are safely handled and ensuring you get your visa too. At the same time, you will learn about what are the current fund investment landscape in Australia as a whole, which will be delivered to you by a popular investment management firm, RAM Australia. The third key focus today is the all-time favorite, the Australian property investment, okay? Owning a property in Australia has become common for many as a second home or purely investment. You may be surprised to know that despite the pandemic still sticking around, the Foreign Investment Review Board in Australia actually reported an increase of 2.3 billion from last year on investments from international buyers alone. Although as far as immigration is concerned, the subclass 132 is no longer available. 132 used to incorporate property development. The good news now is that you could still explore the idea of having your own small property development without having to meet the stringent immigration requirements that used to be in place, but make it as your own investment plan. Our real estate expert today will cover this and the exact property scene right now in Australia. And is it a good time to buy a property right now, this year, and showcase some interesting property listings as well. So I trust this is going to be a very beneficial session for you with great takeaways. So, okay, so before I begin, I'm just going to go through, allow me to just share about the company background. Desmond, could you please move the slide? Thank you. All right, so Global Migration Solution, we carry ourselves as a premier migration advisory firm. All right, next slide, please, Desmond. And we have more than 16 years of experience with a 99% success record. We are happy to say that we have helped more than 12,000 families migrate across globally, okay, mainly Australia and New Zealand. And we have 5 offices across Asia Pacific, which is in Kuala Lumpur, Singapore, Hong Kong, Vietnam, and in Australia as well. We've also been awarded the top 25 Global Migration CEO Award. These are the programs that we carry. So for the longest time, as all may be aware, we've been the pioneers in Australia and New Zealand migration. Okay, and over the time, due to market demand, we have also diversified to provide other services, such which are mainly investment programs through Portugal, US, and Canada as well. All right, so these are the 3 keynote speakers for today. Let me introduce to you Desmond Ang. Okay, Desmond, would you like to say hi?
Hi everyone, I'm Desmond.
Desmond is the founder and managing director of Global Migration Solutions. Most importantly, he is the licensed migration agent for Australia and New Zealand. Desmond, initially an accountant by profession, has now over 17 years of experience offering effective immigration advice for the clients of Global Migration Solutions, and also a popular speaker in migration events. Our second speaker for today is Scott Kelly. Scott, would you mind introducing yourself and saying hi?
Sure. So I lead the real asset management business in Australia. As you can see there, I'm quite old. I've got actually 28 years now of experience, both in managing money for high net worth individuals and family offices, both here in Australia and originally, as you may be able to pick up from my accent, in the UK.
Thank you, Scott, for joining us today. So we also have Prissy joining us from RAM. Prissy.
Hi, hello everyone. Good morning. Yes, my name is Prissy, and I'm the client advisor for Southeast Asia.
Thank you. Thank you for joining us, Prissy. So just to let all of you know that RAM is known as a very established fund managing company in the eyes of the Australian immigration as well. All right. And our third speaker for today is Orbin Hay. Orbin.
Hi everybody. My name's Orbin. I'm my company Residency Real Estate. I've been about 25 years in property and over a decade coming up and back to Malaysia and serving the people of Asia with Australian property.
Thank you, Orbin. So Resiwest, and I mean so Orbin basically offers a wide and worthy real estate options across Australia. And with Orbin's expertise, he will equip and guide you to invest correctly for the solution that meets your needs. All right?
Yeah.
Next, please. Next slide again. So this is just to share the award that we recently obtained. Desmond won the top 25 agent award awarded by U Global Migration, which is actually a global immigration magazine. And most importantly, it's always important that you deal with a registered migration agent with a current license. So this is the registered migration agent for our company, which is Desmond and James Allen Hall. This can be verified in the Australian government website. Okay, so I've done my introduction. So over to you, Desmond, and enjoy everyone.
Thank you, Audrey. Hi, everyone. Nice meeting all of you again. Well, first of all, I would like to wish all of you well. I'm really excited to share with all of you here this morning about the current business and investment programs for Australia. Now, I got so many questions so many people asking me if the migration requirements is going to be easier because of the pandemic. Unfortunately, the answer is no. So as what Audrey have mentioned, some changes has been made on the 1st of July, which have now seen as, the criteria has becoming more difficult. Now, what are the reasons behind this? Number one, first of all, the changes has been due for a long time. So this is the right times to do that. Number two, the demand, for the migration programs to Australia still has been filled up, last year, and especially particularly the business and investment programs. Despite, I would say that Australia might be, among the migration programs around the world that has relatively, a high entry level, either the requirements or the investment amount, but yet Australia being seen as the top choice, globally. Now let's look into very quickly the investment pathway, the business pathway. Now, under the business category, there are two types where you could explore one of these to obtain your residency. So you might have heard about 188A and 188E, especially the 188A, the business innovation stream. This is always the most popular programs among the applicants. So under these programs, the idea is for you to run a business in Australia after the visa is granted. So there's no requirement for you to set up the business during the application of the process. Yeah. And when you set up the business, you can basically set up a fresh business. You could take over an existing business in Australia, or if you wish to join, over a certain percentage of your share interest with somebody, with a business partner, you may choose to do that. And I will share with you a little bit more later, on the next slide, what is the requirements on, the current requirement, on the 188A. Now, 188E, this is an entrepreneurial stream. So these programs has gone through a big changes on the 1st of July. In the past, you are required to obtain at least 200,000 of funding from an approved venture capital company. And this has been cancelled because that program was not successfully executed. And it has now been removed and replaced with the nomination or the approval from the respective state's government. Now, I won't be sharing too much of the 188E today because the requirements from the respective state's government has not been, shared by many of the state's government yet. So there's very little information available at this point of time. And for today's sharing purposes, I will focus more on the 188A. Okay, let's look into this 188A business innovation. If you are exploring these options, take notes. You are required to have been running the business for at least 2 years. Yeah, there is a 2 years of the business experience required in order for you to apply, and you must own at least 30% of the share in the company for you to do so. And the next requirement, which is on the business turnover, do take notes. Your company must, have at least 750,000 turnover over the last 2 years. At least 2 years over the last 4 years. So this requirement has now changed to become 750,000 instead of 500,000 in the past. Also, you must demonstrate that you have a financial capacity, and this could be a combination of the business asset and your personal asset, which has to be at least 1.25 million Aussie dollar. Yeah, again, this requirement has now increased from 800,000 previously. Okay, and there is an age limit under this visa stream. Do take notes that you must be below 55 years old to apply for this visa. And if you have passed the 55 years old, do talk to us because there is an options for you to get an age waiver from certain states. So next, the residency. For you to get the visa and to live in Australia, and that this visa gives you a 5 years provisional visa. Yeah, 5 years of visa validity. So again, this is the good news because it was 4 years in the past, and now has became 5 years. And over the 5 years time, you are required to run the business for 2 years. During that 2 years periods, you must spend at least 50% of the times. Yeah, this visa is a provisional visa that says you must fulfill certain financial requirements. in terms of the amount of investment that you're going to bring over to Australia, in terms of the business that you're running in Australia, there are certain criteria for you to fulfill. So you could, as fast as 3 years later, to apply for the PR and to convert into a PR status. So this is the current requirements on the 18A. Now, let's look into what are the common businesses under this business innovation. So I typically see clients, running food and beverage. This is one of the very common and popular business interests. But from my personal point of view, I would like to suggest that if you're looking or exploring the business F&B business, first of all, you should ask yourself if you have an experience in that. You must be aware that there's a lot of day-to-day involvement in the business operations. You should take into consideration what if your chef didn't turn up, your staff who is making the coffee didn't turn up. Are you able to take over the role? So this could be an easy, but yet could be a challenging business if you don't have an experience in running the F&B business. Now, next, that a lot of clients has always been asking and also exploring the business development. So what is this business development about? Under business migration programs by Australia, you are not allowed to buy over a complete property and just rent it out. That doesn't consider as qualifying business. However, you are allowed to own a land and build few houses on top of the land, and this is classified as a property development. So you could do so. We have also seen clients doing farming and agricultural business. So for example, livestock, for example, some of the agricultural farms such as citruses. So these are, the typical businesses that the clients would, go into. We have also gotten clients into the winery business. So it is a childhood dream of a client. And, a few of them have now gone into the winery business. So also export business is one of, the very popular business as well. So these are the example of the businesses that are, are preferred by the Australian government. So from these businesses, you can tell that, it helps to create employment in Australia. And those export business continue to bring in the foreign income. So that will benefits in the Australian economy. Let's look into the next slide. Slightly a delay on the slides. Okay, now let's look into the investment pathway. So if you have no intention to run a business, or you are currently not a business owner, and it takes you, few years to plan before you can even apply for the 18A, you could then explore the 18B or 18C. Now, these are the two business migration pathway for Australia. Under 18A, it is called investor stream, where you're required to invest 2.5 million, and 18C, significant investor stream, or in short SIV, this required to invest 5 million. So I'm going to share with you a little bit more on the changes on the 18B. Now, to apply for this visa, you must show that you already owned 2.5 million or 5 million respectively, depending on what visa that you're applying. And towards the end of the visa approval, just before the visa is ready for decision and to be granted, the immigration will invite you to transfer the fund over to Australia and to invest through the approved fund manager. And do take notes. I'm highlighting this because some of you might be thinking that the money is needed now, but the answer is no. So depending on the processing time, which country you're coming from, in general, the processing times for 18B takes around 20 months. and 188C takes about 1 year. But if you are from Hong Kong, you get a priority processing time. So your processing, if you are a Hong Kong passport holder, so the processing time for you is going to be much faster. Now, talking about this compliant investment for 188B, it used to allow you to invest into the government bond. Yeah, and this is also one of the very popular programs among our clients and among the applicants, because people have seen it as just leave the money with the government bond, and you are not required to run the business. But what happened was the interest on the government bond was dropped to even 0.1% before this is now replaced with the compliant investment. So in fact, I think this is a mixed blessing, because the investment now gives you an opportunity to generate a better income, and if you are guided by the experienced fund manager who are able to show you, their historical records, and your investment is relatively safe, and there are a lot more for you to learn through the second speaker shortly. So under 18B, there's also an age limit, 55. However, if you are above 55 years old, do talk to us. There are ways to help you to get an age waiver. As for 188C, there isn't a age limit. Now, in terms of the residency, the 188 visa used to be 4 years, comes with the 4 years validity, but now as at 1st of July, it has now changed to become 5 years. And the 188B, during the 2 years period, during the 5 years period, you or your spouse, only one of you need to fulfill the 2 years residency. As you can see, you have 3 years, the minimum, the fastest for you to convert into a PR. So that says if you are completing the 2 years residency within the first 3 years, you do not need to wait until the end of the 5 years to convert into a PR. So you can convert into the PR as quickly as on the 4th year. So likewise for the 188C, so you are required to spend 40 days per year from the date of your visa granted. And again, it is 3 years for you to apply to become a PR. So all you need to fulfill now is just a matter of 120 days over the first 3 years. Yeah, for you to apply for 188. Now, this is the compliant investment. So what does it mean by the compliant investment? So basically, there are certain percentage and certain types of investment you can get into. So you're not allowed to say, trade yourself in the Australian Stock Exchange. You're not allowed to buy, a property directly per se, but you need to engage, an approved fund manager or a licensed fund manager to help you with the investment in terms of meeting the immigration's requirement. So the 2.5 million basically split into 3 components. Likewise, the 5 million is also split into 3 components. Now, for you to apply either whether you are going through 188A, 188B, 188C, or 188E, you must go through a process called state nomination. So that says you must already identify where do you want to stay while after the visa is granted. So that will determine from the beginning, even before you lodge your visa. Yeah. So we call that state's nomination. Once we have determined that, we will submit the state's nomination application to the state's government, to the respective state's government. And if you are going through the business innovation 188A, then we will be preparing the business plan. We will complete all the documentation required by the respective state's government. And when we prepare the business plan, we do take into consideration the respective requirements from the state's government. So there's different states has different requirements. So take notes, for those who do plan to go to Victoria, the requirement is now set at very high standards. In my personal opinion, I think it is a little bit impractical and not practical to set at such a high standards. For example, so one of the requirements is the qualification. So you must either have, a bachelor degree in, for example, science, technology, or engineering, or maths, or medicines. So these are the requirements. If you don't have this qualification, then you must already have at least 3 years of business experience in health, medicines, agri-food, digitech, advanced manufacturing. So these are the criteria for you to even get the state's nomination through the Victoria State's government. So I'm not sure, how the state's government, how many applications the state's Victoria State's government can obtain under this fiscal year. But if you're exploring any other states, I would say that, generally the requirement is still very reasonable. As at now, Western Australia government has already opened up for nomination. Victoria State's government has already opened up for nomination. So we are still waiting for Queensland's and New South Wales governments to announce their criteria. South Australia government has 4 different intervals during this whole fiscal year where they will be doing an invitation, on these 4 intervals. So it is after the state's nomination where you can then move on to lodge your visa application. So this is just a general idea on, what are the process and the procedures that you're going through from the initial assessment until the approval of your visa. Do take note, steps 1 are very important and we take this very seriously. We generally don't take in the clients until the step 1 is, is completely assessed. So we do take into consideration all, we do review all the documentation that is required throughout the whole application. So otherwise we would not start an application. So we do confirm with the clients their eligibility. So this is done, in very detailed format. Then the clients choose where they wanted to go to. We submit an EOI expression of interest and as well as the state's nomination. So steps 2 and steps 3 generally can be completed within the 2 to 3 months time. Then when the state's government accepted you, then you will be getting the invitation. And I would just wanted to highlight this invitation is very important in this whole entire process because this is basically the point where all the requirement is frozen. So if you are, for example, if you recall, there are certain visa class that comes with the 55 years old. So at this point, if you receive an invitation and despite the processing subsequently takes times, the age doesn't continue to run further. So this is the safety point for everything, from the age, from the visa requirements, should any changes comes up after that, you're not going to be affected anymore. Yeah, then we move on with the visa application. As I said, most of the visa, 188A, 188B takes around 20 months. 188C, the 5 million takes about 1 year. If you are from Hong Kong, then you get a much faster processing time. Yeah, and we'll continue to carry your hand until the visa approved. Now, but our relationship doesn't stop there. So we do continue to help clients to supervise, to monitor, to continue to give advice, even though they have landed in Australia. So we have a team in Australia to help the clients with the settlement. If they're on the business pathway, they need any support on the business advisory, finding the right business. We have our professional teams to continue to help clients. And likewise, I will continue to guide clients hands through until the PI is granted. Last, I just wanted to highlight this. So given the pandemic and the borders, the Australia border has a very strict control on who can travel to Australia or who are not. Literally, if you are Australian citizens, if you are a PR, or you are a 188 visa holder, you and your family members are allowed to travel freely to Australia. So as you can see, 188 is the priority of the Australian government. So if you are 188 visa holder, you can travel freely. So we have a couple of cases where, the parents are doing or applying for 188 because the children doesn't have the rights to enter Australia being as international students or holding a student's visa. Yeah. And parents, who doesn't have a PR, are not able to enter Australia to visit their children. Thus, they apply for the 1-8 visa for them to, be able to travel. So we wouldn't know how much more longer the border is going to close to stop all the international traveler, right? So I hope that, this short sharing gives you some good idea on, the new requirements. And I've seen that this new requirement is actually beneficial to Australian government as well as the applicants, more than the concern that they have, okay, in the past. All right, thank you, and I pass over to you, Scott. Yeah.
Thank you, Desmond. I'll just share my screen, just testing my Zoom skills. Hopefully you can you see the screen now? Does that work?
Yeah, it's good, Scott.
Okay, great. All right, well, thank you, Desmond, and thank you for the opportunity to speak for what is this afternoon in Australia. I understand it's a little bit earlier where you are. So what I want to cover in the next 20 minutes is just to briefly introduce our firm, Real Asset Management, then give a very brief economic overview, and touch on asset class forecasts. So what I mean by that is, how is the current economic impact adjusting what we think the returns from different types of investment in Australia will be. Then talk about the rule changes, but I'll be very brief as Desmond has just covered most of that. And then talk about our approach to investing under those rules, both new and old, with particular focus on venture capital, private equity, which is probably the bit that people are focusing on as it's gone up in the new rules. And secondly, they may be concerned about that. So how do we address those concerns? So our business has been around since 2010, so just over a decade old. We describe ourselves as a fully independent wealth and asset management business. We use both of those terms because an asset management business will just provide you with funds that you can choose from. A wealth management business will think about your holistic wealth. And that's important in this kind of process because as you move to Australia, initially you want to have complying funds to make your investment. But then as you become, for example, tax resident, particularly if you're a 188B, that may happen to you, you'll need someone to help you with the sort of broader financial challenges that you'll face. And happily, we've helped more than 160 SIV clients, and now we will be helping 188B holders because they're under a similar program now, pass through that whole program of investing for 4 to 5 years and then applying for their PR and ultimately their citizenship. As you can see, we're based in Sydney, Melbourne, Brisbane. We also have a fully licensed entity in Hong Kong, a Shanghai office, and a joint venture in London. One of the differentiating factors with us, and given our experience in the space, is that we try and look after our clients. We try and really understand the processes that they're going through. So that's working with credible migration agents such as Desmond, but we also try and look after our clients both in their home country, which is where Prissy comes in. So she's based in KL. She'll look after you over there. And then when they migrate here, we look after you when you come in to Australia. One of the reasons we feel we understand that what our clients are going through is that many of us have done it ourselves. So you can see here on the slide, about 17 years ago, it's my wedding anniversary on Thursday actually, so I'm still in trouble for that. I found an Australian lady who was silly enough to marry me. We had our first child over there and then migrated to Australia. We now live here. As you can see, there's the boss and the kids in front of the Harbour Bridge, enjoying the very things that you want your families and your kids to enjoy. So it is all real. It has happened, and we've been through it ourselves. So hopefully we can understand. In terms of the economic background, I guess we've all seen most of the COVID numbers. But in terms of how that's been impacted in Australia, you can see the COVID map here on the left. There's a very small dot right in the middle of Australia, which kind of indicates that we have had, over the last 18 months or so, by global standards, a very low caseload. We've been into lockdown. We're now into our third lockdown. Hopefully it will be brief. but we've managed to ultimately pretty much eliminate and keep COVID out of the country. They've done that obviously by being an island helps, so you can lock down the borders. The government have been very quick to react to any cases. So, for example, there are 10 cases in Melbourne, and they went into lockdown 2 days ago. So I guess that gives you a kind of perception of how many cases cause a lockdown in Australia versus the rest of the world. So that's been the good bit. I guess our vaccine is a little bit slow in terms of the rollout. I just looked this morning, and actually it's exactly the same percentages as Malaysia, with 28% of the population having had at least one jab. We are told that that will accelerate through September, but ultimately the experience of COVID in Australia has been a shallow one. We've largely been out of lockdown. The economy has been able to operate with the borders shut, but we'll probably extend that period and probably have a longer exposure to COVID than most developed countries, because of our vaccine rollout has been slower than places like the US and Europe and the UK and Israel and so on. So that's the kind of COVID background, which is a kind of, shallow experience. And that's been reflected also in the economic numbers. So you can see on the left-hand side, we are very much looking like a V-shaped recovery. In fact, the economy is larger now than it was pre-COVID. And COVID for us was kind of March 2000 or last year, when we were looking at the beginning of COVID impacting Australian economic numbers. And we would anticipate further growth into the future. You can see the dotted blue line going onwards and upwards. And indeed, that the annual growth rate of Australia historically has been around about 3%. We're now looking at 4.25% being the predicted growth rate for the next 12 months looking forward. So Australia has grown already to being bigger than it was pre-COVID. Even with the sort of impediments we've had, and we anticipate that the growth will continue to accelerate. So generally speaking, it's a very shallow economic impact that we've had. That's been because the economy has been stimulated from the government. They've done the various measures. We have record low interest rates. We have stimulus packages. We have JobKeeper here. They've had many similar schemes around the world. So they've been very quick to act and very quick to do all those things, which have essentially worked. You can also see that reflected in employment on the right-hand side. And in fact, unemployment is a lower level now than it was pre-COVID. One of the reasons is that skilled migrants have been stopped coming to the country. But ultimately, that's an important number from a migration perspective, because once the unemployment levels are low, they're far more likely to open up the borders to migration in a kind of larger scale than we've had now in the next few months. So that's the kind of economic background. You might think, and we're going to get on to the types of investments you have to invest under those visas that Desmond mentioned. What kind of returns could you expect, and how has it been impacted by COVID? So what we tried to do is show you this on the screen now. So let me just talk you through the different bars on this chart. So you'll see you've got each of the Australian asset classes being cash, bonds, equities, venture capital, private equity, Australian commercial property, residential property, and then got an average of them all at the far side. The blue bars are what it used to be, so backward looking, what has been the return of that asset class over the previous 3 years. The red bar in the middle for each of them is what we would anticipate in a normal environment for that asset class to generate going forward. So what's our expected returns in a normal environment? And then the grey bar is how has that been impacted by COVID? So we'll just look at the cash, for example, on the bottom left here. Historically, you got certainly north of sort of 3-4%, maybe even, depending on how far you go back, from a term deposit. We've had record low interest rates, but we've also had interest rates falling for quite a long period of time. So you could anticipate in a normal environment, you're not going to get that kind of return from a term deposit, and probably you'll get around 1.5%. That's probably what we would have expected if we hadn't had COVID. But the emergency interest rates mean that we've got 10 basis points only, 0.1% for interest rates. Desmond referenced the government bonds and how low those returns are now. So we anticipate that being the case for the next couple of years. So you can see that how COVID has impacted the expected returns from different asset classes. The interest rate story is reflected in bonds. Equities are essentially pricing in a recovery already. So they're just pricing in the vaccines will work, the developed markets will be operational, fully operational before the developing markets. So the vast majority of the world's economy will be in synchronized growth phase, and that's what it's pricing in because it's a forward-looking asset class. Venture capital I'll come back to, and you can see also lower interest rates means the fact that commercial property in particular has held up very well. And I won't steal Alvin's thunder with regard to residential property because I know he's going to talk about that later on. Turning to venture capital, you can see a couple of things. One is you probably expect that it's a higher risk and higher return type of asset class. But actually, COVID has been a good environment to invest in venture capital. Why? Because those growing smaller companies can gain access to cheap capital, cheap interest rates, so cheap debt. That means it's easier for them to get money to grow. They don't have any hurdles or low hurdles to go over. They also have attracted capital from equity investors, so the type of investors like us, both domestically and from overseas. And finally, it's also COVID has accelerated some of the trends, and I'll give you some examples of things that we've invested in. But it's accelerated work from home, online learning, all those kind of things, and a lot of the companies that are in that space are kind of seeking to be tomorrow's companies, so they're trying to take advantage of those trends. So it's benefited them, generally speaking. So actually, quite a good environment to invest in that. Those are all deeply relevant because those are the asset classes that the government makes you invest in. So Desmond's done this, so I won't labour the point. But ultimately now we have both the 188B and the 188C under the same investment framework. So ultimately, as Desmond alluded to, there's three sets of rules. One is you have to have an approved manager, approved fund manager, such as real asset management. Secondly, the funds themselves need to be approved. And thirdly, the government decides the split of the investment for you, largely. And that split has changed, and we have more venture capital in the portfolios now than we have done historically. I think that's going to be the trend. So if you want to look at one of these visas, I think you need to get your head around venture capital private equity in Australia, because the government is very much sees it as a win-win. So the win for the migrant is they get to come and enjoy the things that I've just shown you on my screen and move here. And the win for the economy is that it directs capital into young Australian entrepreneurial businesses and therefore encourages a new type of economic growth in Australia outside the traditional areas of mining and so on. So I think it's here to stay, and it's definitely part of that win-win tactics that the government is rolling out. So in terms of our approach, I'll go through this very quickly. There's a lot of products I'm going to throw at you, but ultimately we'd love to engage with you if you wanted to talk about any of them in more depth. And you can contact me, you can contact Prissy, you can contact Desmond and the crew. I'd be very happy to set up a Zoom call. It's very easy, particularly if I'm locked down, to do that. Well, let me just skip through it. So I'll go through each of the sections in order. So we'll take the so-called balancing component of 50% first, then the share market investment, and then the VC private equity. So as you can see here, for the balancing component here, you can invest in corporate bonds, you can invest in bank bonds, you can invest in commercial property. You're not allowed to invest in government bonds. You're not allowed to invest in residential property here. And as you can see, we have 1, 2, 3, 4, 5, 6 different types of investment, and they're split between bonds, both bank bonds and corporate bonds, and then different types of commercial property. Generally speaking, if I was to summarize our approach, we try and do two things. We try and make our investments clear, understandable, transparent. And we try and offer the clients a balance of risk and return such that they meet the requirements of the visa, but they also get to adjust the risk and return of their own portfolios in a way that they feel comfortable with. So if you want more growth, we can do that for you. If you want to just give us $2.5 million or $5 million at the end of the visa period, you just want that back, but hopefully with a little bit of profit, and want to dampen the risk as much as possible, we can do that for you too. And in fact, we've built specific products to allow you to do that. And I'll just allude to a couple of them. So that's the 50% bucket. The share market investment, again, we've got the growth option and the lower risk option, the defensive one. Growth option is a standard equity market investment. Desmond described it as small caps. I'll describe it as mid caps. So these are listed investments in Australia on the Australian share market that have a maximum market capitalization of $500 million. So these are not they call them more emerging companies, but they're not really emerging. They're very much emerged and listed on the stock exchange. Our fund there has an annualized return currently of 18%, 18. But as you can see, going forward, we have a realistic target of 10 on that product. It does, however, it's an equity fund, so it basically goes up and down with the market. If you don't want that, then that's why we built the capital stable fund, which is unlikely to lose money over the period, very unlikely, but ultimately that means you give up some of the upside. It's just a far more conservative investment. The same is true of the venture capital space. We have a couple of options there. So here we have a fairly standard, it's a unique product, but reasonably standard product where we're investing directly into the underlying companies. And here the rule is you have to have an Australian-based business with an asset value of less than $250 million. It can't be things like property development or even property related. It can't be a lending business and so on. So there are certain excluded businesses, but ultimately you get to decide the type of investments that go underlying in that portfolio. It's built in a very unique way such that normally you would put your 500,000 if it was an SIV client, or your 250 for a 1BB client into a fund. You'd worry about it for the period of the visa, and you'd want to get your money out as quickly as possible, probably. Ours, you have a line of sight to the underlying companies, and I'll give you some examples of those in a minute. And you can choose if you want to invest yes or no in it, and if so, how much of your 500,000. So you get transparency, you get control, and you get a diversified small portfolio of interesting businesses in Australia. The second one on the right is aimed at even more diversification. So it's a fund of funds. So we pick, the very best Australian venture capital funds, and we put them all in one pot for you so that you get exposed to well over 100 companies. So that's just one way of reducing your risk, where you're spreading it all over different types of sectors and different types of companies run by different types of fund managers. So there's two different approaches. One of them, both of them aim to give you flexibility and far more manageable risk than you might think. One of the main ways we reduce the risk, and I'll come on to other sort of approaches that we have that reduce the risk, is by only investing typically in late stage. So here you have the life cycle of a company. It goes from seed or startup to early expansion to late stage expansion. And then they have access to other type. They might list on the stock exchange because they're, for example, big enough. So typically in a VC private equity fund, you'd have some of these, some of these, some of these, and some of these. We don't have any of these. Sometimes they call it vintage years and they blend them and so on. We don't have any of the startup type of businesses. The businesses that we invest in are established. They're real products, real people, real revenues. And therefore, they are the lowest risk version of VC and private equity in Australia. Typically, more than 50% of them actually have already been profitable. So again, that's an unusually sort of low risk situation for the clients. Pleasingly, we've been able to reduce that risk but maintain the returns. So over the longer period, we've generated returns of 30%. Over the last 12 months, returns for the clients have been 58%. So we still manage to maintain the returns, yet take far lower risk than an average fund. So I mentioned that I'll give you an idea of the type of investments. So Ocean Grown Abalone was an abalone farm and just off the coast of Western Australia near Perth. Jalan was a Sydney-based IVF business. Carbon Revolution make low-weight carbon fibre wheels in the former Ford factory in Geelong, Victoria. It's a co-investment with the Victorian government. Clean Space, would you believe it, make face masks, hence one of our reasons for our strong returns last year. Cluey is an online learning platform, so if you have your maths tutor for your kids, they do it online now through Cluey. Obviously a very good trend to be following. An IAS, or an engineering company that make high pressure water cleaners for oil rigs in Western Australia. So a couple of things that are notable about that. You can see all of them are very different businesses in different parts of the country. So you can have a diversified range, which again is important and unusual in Australia because some funds tend to be like a biotech fund or a tech fund. So we like to think that we give exposure to clients to all the possible sectors in Australia so that you've got a kind of balanced portfolio that's not overexposed to one theme. Second thing is these blue little ribbons indicate how we exited. So all of these we've invested and we've already exited. So the rules changed in 2015. There was a lag, so the clients started coming into this fund in 2016, and we've already invested and returned the money to the clients. That's important because when these mature, that's the word that the law uses. You no longer have to reinvest. You can if you want, but you can put them into the bond fund or the property fund or something you're more comfortable with, or you can go again and recycle it. So that's important to remember because the average holding period is 2.5 years. So even a 188B or a 188C holder, you don't want to be stuck there for longer than your visa period. So having a shorter average holding period is very important, hence that late stage. So I'll just dwell a little bit on the risks inherent in that, because ultimately that's what people are focused on. They're bothered by the risk because the government is making them invest in it. So they're typically reluctant investors in private equity and venture capital in Australia. They shouldn't be too reluctant because if you look at this chart, it's actually a pretty good market compared to the rest of the world. So this is the rest of the world over here. You've got risk down one side and return on the other. So you want to be down here, bottom right, because you want higher return and you want lower risk. So ultimately, Australia offers you a very compelling balance between risk and return, and that's probably reflective of the strong governance, the rule of law in Australia, the fact that you have more transparency, more regulation, and so on, removes some of those risks inherently. So inherently, structurally, the market in Australia is lower risk. We then go on to build further and further layers of trying to manage that risk on your behalf. So we're very selective. We look at about 1,000, sounds an exaggeration, but it's true, 1,000 opportunities, 1,000 companies to invest in every year, and we pick about 10. In our fund, particularly the fund of funds, we hold around about 20% cash. So we wash out that a little bit, and only 80% of your money is actually invested. We have a broad range of diversification, which is rare, as I've described in Australia. We invest in those late stage established businesses, not startups. For 188B clients, there is, if you become tax resident or even SIV clients, there's deep tax benefits for investing in the fund. Essentially, it's tax-free. And as I've mentioned, you get transparency. So there are many, many ways in which we try and make this investment far more palatable for you. And most of our clients are entrepreneurs, which means they go from something, it goes from something they're worried about to something they actually quite enjoy investing in because they invest in youngish businesses in Australia in different sectors and with a relatively small portion of their wealth typically that are very interesting and have historically made very good money for them. Now, if you blend all that together that I've been talking about, and you say, okay, well, I just want a conservative portfolio. I want to pick all those lower risk options. I want to pick the lowest risk VC option I can pick. This is the kind of experience you would have had over the last few years. So you can see the portfolio is here. The target return, looking forward would be about 9 and a bit %. That's now higher because, as Desmond mentioned, we have a higher expected return because we have more VC in it. Historic return has been more than that. So it's been around about 10, 11%. But going forward, we would set people's expectation at around about 9 and change. So you can see that's been a fairly consistent return, notwithstanding we've got 20% exposure to private markets, which tells you, this is the acid test. Have we managed the risk accordingly? And the answer is, according to this chart, yes. You might think, well, how have you done specifically during the COVID period? You can see here that here's a typical portfolio, and over the last year or so, trying to encapsulate the worst of the COVID period there, we're still annualizing at actually 12%. So the market has rebound equities, but interest rates are very low, and we think we've done a decent job. And it's been one of those periods where, for a fund manager, you're always separated. The wheat from the chaff gets separated because, the Warren Buffett quote at the top there is, only when the tide goes out do you realise who's been swimming naked. That speaks to people's risk management. So when the times get tough, that's when fund managers really add their value, because trying to initially protect capital for their clients and incrementally grow it over time. So you can see some of the things that we do, some of the things we don't do, that other people do, that have got them in trouble. That's kind of where I was going to stop for now. I'm very happy to hand over to Orban and let him talk you through property stuff and ask questions at the end. Over to you, Orban.
So,
Thanks.